Good morning, this is John Piper with the Thursday video, and it's Thursday the 16th of February. I'm doing a video today because I have a few things I want to show and I can't do that in a written report format. I mentioned it was expiry week. I said in the expiry week that stops tend to get taken out in both directions, and silver is a particularly good example of this with this move here, which first took out the peak. So I'm talking about the rally here. First took out the peak and then plunged down, take out the low. Now I had an extreme stop above here. That was obviously triggered. What I tend to do with the extreme stop is I watch it. So I don't place a stop. The plan is to watch it and then place stops afterwards. Now, as it happened, I couldn't actually see this. I'm sorry, I couldn't watch it for one reason or another, so I missed it. So I was a bit lucky that it just blipped down and took out what may have been my stop, although it was only a small penetration. I tend to place stops a little bit bigger than in any case. It's now broken through again. Not conclusively, because yet again we've got another spike at the moment. We'll look at the wave pattern in a minute. I just want to make a few points about trading strategies. I've said before that the longer term approach, catching a trend, sticking with it, is one that I think is far more profitable, far easier than the shorter term approach of taking positions, short-term positions, making a few points here, a few points there. I mean, obviously you can gear up and make decent percentages of profit. But for me, I prefer this approach. It may be because I'm now a little bit older than I was when I first started in the 80s. Obviously, I'm 30 years older than I was in the 80s. Or maybe other factors, but it's an approach that I think has a lot of merit. And if you catch a trend, and then I've been buying stocks and ETFs, as you know, which are geared, which actually magnify the profits of the actual underlying market, like gold and silver, and I'm finding that very rewarding. Now, if we see a silver and gold bull market and we see the 500-point rally I've been talking about, etc., etc., and it's interesting actually. We think about inflation. Then gold at I think $10,000 is actually just the inflation-adjusted level it was back a few years ago. And in this point, I mean, I noticed an email from Minesh Bindi, who runs Gold and Silver for Life, who said that 971, $1. Is now worth just 3 cents. Now that's a pretty incredible statistic. I was actually employed in '71 as an article clerk. Hated being an article clerk, by the by. I got £700 a year, as I remember. So if we take $1 down to 3 cents, that's a decline of 33 times. Multiply £700 by 33, you get about £22,000, which I think is roughly what an article clerk gets these days. So that sort of tends to support that calculation. I suppose I rather doubt article clerks are now called article clerks. They've probably got some somewhat grandiose title, having done their degree, etc., etc., etc. Anyway, the point I'm making is that inflation is, if you think about that statistic, since '71, what's that, 45 years, okay, quite a long time. But for the currency to decline by 33 times is pretty staggering and pretty disgusting, really. I mean, if that's the way the government is managing our business, our country, it's hardly a fantastic record of what they've achieved over that, I would say. I mean, okay, it's all about mortgage lending, actually. I think the mortgage lending just pumps up cash into the economy, pumps up property prices, but deflates the currency, which is, I know, it seems a bit of a scam if you look at it that way. Anyway, I mentioned that in one of my recent flyers. So the point I'm making is that we're looking at charts, and of course, I think Elliott had a similar problem in the 20s. There was quite a high inflation rate, as I recall. And inflation has a big effect over that kind of time. If you look at longer term charts, then the inflation impact is considerable. And I mean, FTSE saw a new all-time high recently on the basis it went up above the previous high, but in inflation-adjusted terms, it hasn't, because over those 10 years, inflation was well beyond the small increase we've seen over that thing. Same with the Dow, probably. Everything else, all these figures may look incredible. It's a new all-time high, people say, but not really, I don't think. Anyway, the point I'm making is that looking at these charts, looking at a target of gold at $10,000, it may seem incredible, but it's all to do with the debasement of the currency, which the governments collude in doing, and it's not that incredible. In fact, it's the same with silver. Anyway, the point I'm really making is that a long-term trend in gold and silver, it actually seems to be inevitable, as far as I can see. I mean, if you have the debasement of the currencies, then surely it's inevitable that something like gold or silver will actually increase over time, Not to say it won't go as ever. Market will go too high, have to adjust, come down again, and then start browning again, etc., etc. So my view is that we're going to see this rally continue. So let's have a look at the wave count now. Right, here is the wave count of silver. My wife just told me I said anyway about 1,000 times in this email, so in the video. So apologies for that. I'm sure that's a slight exaggeration. I hope anyway. 1, 2, 1, 2, 3, 4, 5. That's the 5-part third wave. 4 and 5. That's wave 1, A, B, C. This is wave 3 coming in. And I've got a very clear 5 waves there, which is wave 1, I think. That's wave 2. At this point we get a bit confused. There's no clear third wave acceleration phase there, which is why I think it's still to come. 1, 2, and then 1. It gets a bit messy around here, all these 1, 2s. But a third wave thrust still looks due here, so I'm pretty keen to be on board that, as I am. How you achieve that? I mean, we're now broken again to new highs. It's again hesitating. We have, of course, expiry tomorrow, so I would expect, if it's going to happen, I would expect the move around expiry. And you obviously got these reference points here for your positions. In this kind of trading, it's quite hard to. I mean, my concern is I just want to jump anything I see really, but I may get stopped out three times out of 4 or something, but that doesn't bother me too much because once it starts to go, it should easily repay those. So I sort of nibble away in fairly small positions, but a lot of those get stopped out. It's much better really to trade it in your own fashion. Is my view. Let's just go back on the look at the daily chart. Right, the daily chart silver is interesting because we have the 200-day moving average. We're now slightly above it. So I think what's happening here is that the 200-day moving average is actually exerting price control. Price control basically means it's controlling the market, but it looks like we're trying to break above it. But obviously what we're seeing is the market blip up and down around it at the moment, and a nice clear thrust would be very encouraging right now. So we've got gold now. Well, gold is seeing something similar with these buying spikes coming in. Yet again, also a probing high, but not above the highs as yet. So we've got a couple of decent selling spikes there. We've got a clear sort of A, B, C, B, C. So that's possibly competed. It looks quite a decent thrust. So it's a similar count, not quite the same. Let's go on to daily, have a look at the 200-day moving average, which I know is fairly close. Okay, so it's a little way away, still around 1260 levels, so no real change there. That is yet to come. Alright, finally look at DAX today. Saw the peak there. ABC decline. 1, 2, 1, 2, 3, 4, 5. That's a third wave. 4 and 5. A B looks a bit unsettled. So I think we might well go a little lower. But I wouldn't be surprised to see that as being a corrective move and the market to go higher, possibly next week. Okay, that's a call today. Hope you found that interesting and useful. Back to the report at the weekend. Please get in touch with me if there's anything I mention in these reports which you'd like to be clarified. I mean, my sole purpose of doing this really is educational, to help other traders make good money. Having been on the other side of the fence, making big losses in the early days, I very much like to help people if I can, so feel free to email me, as I said. Have a great day, thanks for listening, and bye for now.